All right, guys, so we're going to look at the top 10 retail stocks and see if they're kind of one of these we need to buy more now, or do we just need to run completely away from them? There's actually some huge surprises on this list that I didn't think would be on there. And actually, number one, I'm completely shocked that that stock's on the list as well, and much less being number one for retail investors. So if you're liking the new style videos and some of the different things I'm trying in the videos, make sure you click that like video so that way you let me know, hey, you're liking it. And also check out the pinned comment down there because that's the new channel where I talk about finance, building wealth, retirement, entrepreneurship, and a bunch more of that type style content. So if you're interested in that, check it out. It's the pinned comment. All right, so let's go over each stock individually here. And the way I'm kind of going to do this is I'm just going to kind of use a rating system. So we'll talk about the stock specifically, the good, the bad, all that good stuff like that. And then I'm going to rate it, basically pump it or dump it. Now remember, when I talk about all this, I'm viewing it from a long-term buy and hold investor's perspective, not a trader. There might very well be some great trades with these stocks, but that's not what I'm talking about. I'm talking about long-term buy and hold investing. That's kind of the angle that I'm looking at here when I'm talking about these stocks. So coming in at number 10 on the list is AMC stock. And you guys know my feelings on AMC. It's been on plenty of lists that we've done on this channel in the past. It's just, it's a trade. There's no way a long-term buy and hold investor. I have no idea, buying gold mines, all the other craziness that comes around AMC. It's just kind of its own category, its own thing. Absolutely, there's trades there. I've seen trades go very, very well. Obviously, if you're counting on the $100,000 per share or whatever all the other ridiculous narratives out there about this stock are out there, I'm sorry, in my opinion, you're counting on nothing there. So for me, this is absolutely a dump it type of stock because I see no way as a long-term buy and hold investor. This is a great stock to hold long-term. At number 9, we have NEO stock. And you guys know I own NEO. I actually like it. But I can't say they have not struggled. They have absolutely struggled with execution. Their cash burn is crazy high, and it's for a lot of things. Their brand building is what they're actually doing. They're not actually getting into manufacturing cars nearly as much as I would like them to. Kind of, hey, basically, guys, let's execute towards producing vehicles and getting the margins, higher and everything else. And then we can talk about, and you can also do some simultaneous brand building. But right now, the cash burn is so high, even though management has said they're trying to bring it back down. And I continue to see things like Neo House pop up and a lot of other things that, may very well add to the bottom line in the long term. But in the short term right now, especially at the cash burn that they're at, they have to get that rate under control. So for me, although I still think it's a pump it type stock, i.e. I want to hold it long term, I will say you got to be cautious with this one and you have to be patient because it's going to be super volatile. And more importantly, I don't see them hitting profitability for at least the next 2 years, and anything past 2 years is really a guess in regards to the stock market. So for the foreseeable future, I don't see them getting to that profitability, turning that profitability corner, which means you have to be patient with this stock if you're going to own it. And next up here on the list, another automaker, and that would be Ford. And guys, I've never been a fan of Legacy Auto. Take a look at their balance sheet. And take a look at all the financials and you'll just see, disaster and landmine after landmine after landmine. Now they have the labor union and all the stuff going on with them in regards to that agreement. Even if they're able to come to an agreement, it's going to cost Ford a lot of money, regardless of what the agreement is, much less if they strike and they're able to shut down, which of course is going to hurt already hurting sales numbers. It's going to hurt that even worse. So there's just all kinds of problems all the way around with Ford stock. I've never been a fan of them to begin with in regards to how I view the company financially. That's what I'm talking about there. And I don't see any way that this all gets solved, in the short term, much less in the long term. These are systemic problems that they've had for, probably 20 years now. They have not managed to improve on them over the course of that 20 years. So for me, this is absolutely a dump it type of stock. So number 7 on this list is Tesla. And you guys know I love Tesla. Now, not as much as the Tesla bull, but I still love Tesla. To me, they're absolutely making a long-term play, which means some short-term pain. I think we're going to get more short-term pain. In the meantime, especially with the margins and some of the other things that I think next quarter, we're going to see those hit that bottom line, hit that EPS number harder than we think it's going to get hit. But long term, this is a great stock, great company. I have nothing but positive things to say. I'm not necessarily saying it's going to be, a $10 trillion market cap in, 5 years or whatever, some of the crazy stuff that's out there. But for me, it's absolutely a pump it type of stock. And if you want to continue to give me shares on a discount for Tesla, I'm going to continue to buy them. All right, so now that we're done with kind of the automakers and we're going to run a 3 straight automakers there in regards to popular retail stocks, let's get into the rest of them. So number 6 would be Disney stock. And guys, there is all kinds of problems here. I'm not going to get into all the political nonsense and all the other stuff like that. Looking beyond that, just looking at the company, they have business issues. Now you have the parks that are just booming. Business hasn't been any better in regards to the parks. It's absolutely carrying the business, but the streaming service has been a complete flop. Costs are out of control. There's all kinds of problems over there on the streaming side of the house for Disney. So there are significant business problems. That's why Bob Iger came in Everybody thought, hey, he's going to have a quick fix. I think he thought he was going to have a quick fix. And shortly after getting a look at everything, he decided to sign on for a few more years to obviously try and see this all the way through. So this is absolutely a turnaround play. And if they can turn around the business, my gosh, you're going to make a lot of money on this stock because it's just beaten down and probably not getting out of the doghouse anytime soon. But until then, in regards to this stock, man, it could, if it continues to get ugly and he's not able to turn around, this is basically a dead company, a dead stock at that stage. So for me, Disney is actually both. It is a pump it or it's a dump it. And what I mean by that is if you're willing to take on the risk and view it as a speculative play, there is a speculative play there to be made. But if you're viewing this from strictly, hey, I want a great stock, great dividend paying stock that's going to take care of me and have less volatility and, not act like a hyper growth stock, then Disney's not the stock for you. And for me, that puts it in the dump it category. So number 5 is the SPY, just basically, ETF. And I don't know, I got nothing bad to say about that. It's not a bad strategy at all. If you want to, allocate 20%, 50% of your portfolio, whatever percentage you have into that, sure, it's a great way to hedge. It's a great way to have exposure to everything, especially if you're not comfortable with individual stocks and you're not going to put in the work to do due diligence, to do, all the work, listen to the earnings calls, dive all the financials, all the reporting, everything else like that. If you're not going to do that, it's a great place to put your money for the long term. So I've got to say that definitely falls in the pump it category. So at number 4 is Nvidia. And guys, this stock has been on an epic run this year. This is just a great run, especially given where the market was at the beginning of the year when all this started. It's just on an incredible run. And for me, I don't see it stopping at least for the next year. Now, that doesn't mean there's not going to be short-term volatility. Of course, immediately it has these killer earnings and then it runs up. And of course, it runs up into earnings and it has killer earnings, continues to run up again. I don't know how long they can keep up that pace for. But for me, in terms of a long-term buy and hold investor, NVIDIA has shown that they are able to innovate throughout the years. They're able to continue to push that envelope forward. And so for me, it absolutely falls into that pump it category. And number 3 is Apple. And guys, that's my favorite stock of all time. I love Apple stock. I think they are great, but I can't lie and say that they are not in regards to valuation. They're rich. They're trading rich. And more importantly, they're going to have stagnating growth. We've already seen it. I don't think anybody from the Apple event yesterday that the iPhone 15 was, or I guess it was 2 days ago. Anyways, doesn't matter. The point being, the iPhone 15 doesn't look like it's this, game-changing, blow it out of the water type deal. Now, I've been surprised in the past with iPhone where I didn't think much about it and then sales were through the roof. But in regards to this one, I'm not sure we're going to see that same exact explosion of growth yet in regards to the iPhone. On top of just some slowing global demand, obviously there's some macro factors kind of factoring here. And the fact that Apple's just been growing at a breakneck pace for the past few years since the shutdown and everything else. It's just time for that stock to finally cool off. So I definitely think it's a pump it. I think that's the category it falls into. But you got to be cautious with this one because in the short term, I'm not sure we're going to see good quarters the next couple of quarters. And when you're trading as rich as Apple is, especially if the market kind of goes risk on like it kind of wants to, that's something right there that I could absolutely see it trading down in the short term. But for me, long term, absolutely, it's a pump it stock. It's the best stock in the stock market, in my opinion. At number 2 is Microsoft. And guys, another just solid company, just like Apple. I mean, they basically made it pretty much unscathed through the entire downturn last year. Not that they didn't go down, but just didn't get beaten up like everybody else. And have had a great recovery. Microsoft continues to execute on a very high level. And it's just a great stock to own long term. Now, short term, obviously, a lot of different things could happen. It's absolutely trading on the rich side as well. But, in regards to Microsoft stock, I see no way that this is not a pump it type stock that fits into that category. At number 1, and to me, this right here was the most shocking one of them all, and that would be Amazon stock. And guys, it's number 1 for a reason. I was buying Amazon last year in the 80s because, I don't know, for whatever reason, nobody wanted Amazon stock as if they're not, this huge growth engine. They don't have AWS that's continuing to crush it. And more things are not going to move online and more, less people are going to buy online. I have no idea what the logic was back then. It was just crazy. Anyways, I'm so glad we picked up shares there. And to me, this is a great stock. It's going to continue to be a great stock. There is no competition in regards to Amazon, and there's no way they don't continue to grow year in and year out as they continue to march forward. So for me, this is absolutely a pump it style stock, and that's the category I'm going to put it in. And remember, if you want to see all my buy and sell alerts on real time on a lot of these stocks, you want to see my watch list complete with price targets for a lot of these stocks, you want to use the stock analyzer tool completely for free, take 5 courses for free to learn how to do evaluation, how to actually create a plan for your stocks, and a bunch of other stuff like that. We do 3, 4, 5 videos a week I put in there just strictly for the group. We do live Q&As weekly. You can slide into my DMs, talk to me anytime you want. I answer every question in there. and just a ton more, guys. Make sure you check the link in the description of this video for the Market Insiders private group to see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market, and click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.